Now that we have discussed the standard deduction, let's turn to the itemized deductions. The itemized deductions are located on Schedule A, Itemized Deductions, and on line 12 of the 1040. We are going to explain who should itemize and what expenses may be itemized, and you will use Schedule A, Itemized Deductions. If the taxpayer has no California tax liability, chances are they will not have enough itemized deductions to itemize for their federal return. However, if they do have a California tax liability and a certain amount of deductions depending on their filing status, then it would be to their advantage to itemize for California. Take a look at this flowchart for some information on the thresholds and the statuses. If it is close, go ahead and itemize. TaxSlayer will select the most advantageous deduction, standard or itemized. If the taxpayer has no California or federal tax liability, don't bother itemizing. Use the interview tips on publication 4012, pages F5 and F6 to help determine if they have sufficient deductions that would warrant itemization. Medical and dental expenses can be included for the taxpayer, spouse, and dependents. These have to be unreimbursed, meaning not paid back to the taxpayer by medical insurance. There's an extensive list of deductible and non-deductible expenses listed in the 4012 on page F8. Consult the table if you have any questions. More detail is contained in IRS Publication 502, Medical and Dental Expenses. Basically, out-of-pocket prescriptions can be included, but vitamins and over-the-counter drugs cannot be included. The key is paid out of pocket and not reimbursed. Medical marijuana, even if prescribed by a doctor, is non-deductible. Cosmetic surgery is only deductible to improve a deformity related to a congenital abnormality, an injury resulting from an accident, or a disfiguring disease. TaxSlayer calculates the 7.5% adjusted gross income floor and subtracts that amount from all medical expenses. You just enter the amount of expenses. If the total of medical expenses are less than 7.5% adjusted gross income, there is no deduction and no point in entering all the information. Medicare premiums entered with Form SSA 1099 are automatically entered into Schedule A by TaxSlayer, so don't double the amount of Medicare insurance. If the taxpayer pays Medicare premiums directly, as opposed to a Social Security benefit reduction, you must enter the Medicare premiums. Enter any additional Medigap or dental insurance. Long-term care insurance is deductible and entered in a special section in TaxSlayer. Some taxes can be used in the itemized deductions. State and local income taxes, for example, or in lieu of state and local taxes, it may be possible to deduct sales tax. Also, real estate taxes paid can be deducted and some foreign income taxes, but these are limited to $10,000. Enter the information and TaxSlayer will help. Just be sure you see the amounts in the Taxes You Paid section of Schedule A. State and local income taxes and state sales taxes are only deductible on the federal return, not California. If the taxpayer is taking the federal standard deduction but itemizing in California, you can skip entering these taxes. If itemizing on the federal return, enter both SALT and sales taxes. TaxSlayer will automatically calculate the most beneficial deduction. If the taxpayer had a large purchase like a car or major appliance, enter the additional sales tax paid. Your local sales tax rate can be found at the California Department of Tax and Fee Administration website. When using the California DMV VLF calculator, the license plate number and VIN can be found on the car registration. So if the taxpayer has the car, they can run out and get their registration. You should bookmark these tools on the tax prep computer. Mortgage interest is interest paid on a home loan. Second homes or vacation homes count. A home loan can also be a loan on a motorhome or boat if they have bathroom and cooking facilities. However, the home cannot be used as a rental home as rental is out of scope. Home equity debt is no longer allowed as a deduction unless it was used to build, buy, or improve the taxpayer's qualified residence. So a home equity line of credit can only be deductible if the home equity line of credit was obtained for a major home renovation such as a kitchen or bath. A second mortgage or home equity line of credit taken for other purposes such as vacation is not deductible. Enter California home equity debt up to $100,000 manually on California Schedule CA. Points paid as a form of interest can be included in the Schedule A. Investment interest is out of scope for VITA. Interest that isn't deductible includes car loans, personal loans, and credit card interest, as well as others. Let's talk about reverse mortgages. During the life of the reverse mortgage, the taxpayer doesn't pay interest, so there is no deduction. In the year that the reverse mortgage ends and is paid off, the interest is included in the payoff. This is considered to be interest on home equity debt and is not deductible except in California. In California, up to $100,000 can be deducted. If the taxpayer owes a lot of California taxes and could benefit from a large itemization, they should be referred to a paid tax preparer. Donations and gifts to qualified charities and organizations can be included in Schedule A. Donations can be cash or goods. You will use fair market value of goods donated. Gifts of money or donations not allowed are any made to business organizations, chamber of commerce, social clubs, political organizations, homeowners associations, etc. You also cannot deduct costs of raffle, bingo, or lottery tickets. Tuition isn't considered a gift or donation of charity. Unfortunately, gifts of time or services are also not deductible. Neither is blood donated, since the IRS currently does not have a way to calculate value for gallons of blood. That's strange, because they seem to have rules for everything, yeah? Catch up, IRS. You do not need to see proof of donations. However, advise the taxpayer to keep all receipts. Cash contributions should have associated bank statement, canceled check, or a written communication from the charity outlining the amount of the contribution received. For contributions less than $250, either a bank record or a written acknowledgement from the charity is required. For contributions more than $250, both the bank record and a written acknowledgement are required. VITA only deals with contributions up to $500. We do not complete Form 8283, non-cash charitable donations, which is for non-cash contributions of more than $500. However, AARP Tax Aid handles non-cash charitable contributions up to $5,000, so refer anyone with more than $500 in non-cash charitable contributions to Tax Aid. They will appreciate the referral. Taxpayers must itemize to be able to claim charitable donations of cash, goods, or mileage for charitable activities. Taxpayers who itemize are allowed to deduct 20% of their adjusted gross income. Clients who contributed more than 20% of their adjusted gross income are out of scope for our program. Gambling losses can only be deducted up to the amount of any gambling winnings. So you can't deduct losses if you don't have any winnings to report. Also, since California lottery winnings are not taxed, California lottery losses are not deductible. Work-related expenses are only allowed for disabled individuals. Expenses that allow them to work, such as attendant care services at the workplace, count as deductions. The Tax Cuts and Jobs Act of 2017 removed deductions for unreimbursed employee business expenses and miscellaneous deductions that were subject to a 2% adjusted gross income floor. These include deductions for union dues, uniforms, work tools, tax return preparation fees, safe deposit box rental, and more. California does not conform, so go ahead and enter those miscellaneous deductions into TaxSlayer. TaxSlayer will automatically apply those deductions to the California return. Teachers can claim unreimbursed classroom expenses over the $300 educator expense credit and apply those as unreimbursed employee expenses. However, those excess expenses will be subject to the 2% floor. If someone comes in with a stack of receipts and wants to itemize, they can use this downloadable California IRS deductions worksheet, or you can have the taxpayer go back to their ATCA intake form where there are blank spaces for each category to have amounts filled in. Ask them to calculate their deductions and fill out the sheet. If you can work on other parts of their return, go ahead, but if they need more information or more time, refer them to the scheduler so they can have another date to work with you. They can also get their own online account where they can fill out their deductions and update their tax information. Here is out of scope for this lesson. VITA cannot do casualty losses, including disaster loss caused by California fires. VITA also cannot do 1877 cars for kids or any other vehicle charitable donation. We don't do returns where the charitable deductions are greater than $500 for non-cash, where the taxpayer has a charitable deduction carryover, or where the taxpayer is claiming a charitable deduction greater than total income. This completes the section on adjustments, standard deductions, and itemized deductions. This section was all about finding ways to help the taxpayer get the highest deduction and determine whether they should itemize or pick the standard deduction. If you are unsure of something on the taxpayer's intake or deductions list, call them for clarity or ask another volunteer to take a look for quality review. And as always, rely on good old publication 4012.